Hi everyone and welcome to Wall Street Multimedia's Market Watch. I'm Tiffany Lu bringing you the latest market news. On Monday, Chinese stocks posted their biggest one-day gain in a month with the Shanghai Composite rising 4.9%. This came on expectations that Beijing would continue to support the market by buying shares after the release of disappointing economic data over the weekend. This data showed that Chinese exports have tumbled 8.3% in July. The U.S. stock market closed higher on Monday with the Dow up over 241 points after a Fed official suggested a rate hike may not occur as soon as September. On Tuesday, China's central bank devalued the yuan, leading to its biggest one-day loss in 2 decades. This could be a sign that the government is worried about China's slowing economy. However, many are concerned about the risks that accompany the move. U.S. stocks opened lower and deepened losses by noon, with the Dow down 247 points or 1.4%. The Nasdaq was down 1.31%, and the S&P 500 was down 1.15%. Now let's turn to Peter Costa to see what he thinks about China's yuan devaluation and how that could affect the U.S. stock market and the Fed rate hike. So we saw the Dow drop over 200 points in early trade today. Do you think China's yuan devaluation will have a long-term impact on the U.S. stock market? And who are the biggest winners and losers in this situation?
Well, I think that, it depends on where they go with the having the Chinese currency. If it's going to free flow with the market, the markets will adjust. But if it's not, and it's going to be, devalued, and then the central bank is going to, take over control of it again, the effect is going to be completely negative. It's going to be, gone, whatever they were trying to accomplish. For that, with that, that the dollar is strengthening, which will continue to strengthen against the Chinese currencies. So what I would think is you'd probably want to play it a little bit towards small and mid-cap companies, which have most of their production and most of their businesses in the U.S., kind of protect against that rising dollar. So I would go that way.
What effect do you think the currency devaluation will have on the Fed rate hike?
Well, I think that, they're going to wait and see. I think that they're probably, they've been more inclined to, my feeling is, and I'm probably in the minority, I thought that because the numbers we got last Friday, I didn't think were that strong. And to me, that wasn't going to push the Fed over the edge to start raising hikes. I don't think this is either, but I think they're going to take a definite wait and see approach, which will basically put them past the September point, and probably December would be the earliest. My feeling was they were going to do it next year. I'm going to stay with that.
What advice would you give investors who are trading in U.S. stocks, trading in China?
Well, that's a tough one. There's still quality companies in China. There's still, you have to really do your homework, though, because this, a devaluation can adversely affect the trade between the U.S. and China, between China and, any of their other partners. So, I would be probably a little more cautious now, even with a lot of research. I think you'd have to just wait and see what shakes out. Most of these companies that have a broad international presence, well, they'll adjust, and it will probably hurt the bottom line for a quarter, but I don't think it's going to really extend much longer than that.
That's it for this episode. I'm Tiffany Lu, and thanks for watching Wall Street Multimedia's Market Watch. I'll see you again next time.